Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show after a busy weekend in Vancouver at the Metals Investor Forum.
Just what was the show like?
Well, the attendance and the mood was subdued compared to January in Vancouver, where the speaker hall was full, even had standing room, people standing in it. The buzz was a lot stronger in January. I spoke on Saturday, which was well attended than Friday, which is no surprise because it was a gorgeous weekend in Vancouver. But I still spoke to a hall that was about 3/4 full of people. Now, there's no surprise that the market is subdued. I went through all the TSX listings in Kaiser Research using my search engine just to see what they looked like. And this is the resource sector companies, mainly producers, and I was shocked to see that most of them were down 20 to 40% from their peaks in March. And these are producer companies, real companies, not little juniors that are exploring to make a discovery or plodding along with feasibility demonstration work. And I wasn't surprised to see this happening with the base metal producers because China's rebound has been very, very weak after it gave up on zero COVID. But gold during this period has been, hovering around $2,000, trying to turn it into a base for future higher prices rather than the ceiling that it always eventually bumps up against and then falls through again. So even the gold producers have been weak for the past couple months. And the other thing is another sign of the subdued mood was the Metals Investor Forum puts on a dinner on the Friday evening for the speakers, the exhibitors, and their sort of high net worth clients. And that's usually well attended. This year it was at the Ophelia restaurant, which specializes in high-end Mexican food, and it's a 10-minute cab ride to the other side of Falls Creek, so not really an obstacle. A lot fewer people showed up at this dinner than expected, and those who did, they left relatively early, and that turned out to be a boon for me because I ended up talking to the bar manager, Eric Mendoza, who introduced me to something that I really knew not much about, and that was mezcal, which I only really remembered as something that came with a worm in the bottle during college days and wasn't something I was interested in. And more recently, I tried it and tasted like burnt rubber tires, so not very pleasant. But he ended up explaining the whole lore of this, and he's spent 15 years in the New York bar scene running bars there. So he was extremely knowledgeable. And tequila, which is what everybody knows, it's made from the blue agave plant, and it has to be grown and harvested in Jalisco state, whereas mezcal can be made from any of the agave plants in any state, and most of it comes from Oaxaca, which is in the southern part of Mexico. And it was interesting to taste a variety of these with pleasant smoky flavors. It is much more an artisanal business than with tequila, which has become very industrialized to the point where you have a brand with George Clooney's name on it. So the bottles of mezcal tend to cost more than similar quality tequila, but it was very interesting to be shown these half gourds that are the traditional way in Oaxaca for drinking this, and to have a little crash course in what the mezcal world is all about. Eric did say that Vancouverites don't really understand mezcal, so the Ophelia restaurant has had a hard time really getting people to catch on. But I think that's going to be a trend as people realize that there's a lot of complexity and variety within the whole mezcal range of agave plant liquors. So I've now assembled all the my presentation, the two presentations by my companies Beyond Lithium and Westfault Mining, and the backstage interviews that I did, and the newsletter discussion panel that was done at the end of Saturday. That's all now available in a blog piece, which if you go to my website, you can go there and click on whichever one you want to see and catch up on what you missed on that gorgeous weekend.
How were the two companies in your session, Beyond Lithium and Westfault Mining, received?
Well, I talked to Al Frame and of Beyond Lithium and Sandy McVeigh of Westfault Mining, and they sort of said about 10% to 20% of the traffic that came by the booth and chatted with them involved very knowledgeable people who were serious, and that's, no surprise in the case of Westfault Mining, because gold has been around for a long time, and Westfault's story is one of we are a proxy for a higher gold price, and when gold goes up, somebody's going to panic and buy out the company and put the Hasbrook project into production. Al Frame himself was surprised at the level of knowledge that he encountered amongst the people talking about lithium, because lithium is a relatively new story. So this knowledge gap, it was interesting when in my panel discussion, I had about 6 questions, and the last one was about lithium. And I asked my peers, and there was only one other lithium company at the Metals Investor Forum. It was a junior involved in direct lithium extraction of brines in Saskatchewan, so it wasn't part of what I call Lithium Mania 2.0, the hunt for pegmatites in places like Canada. And so I asked my peers, to what extent do you have a lithium story in your portfolio of covered stocks? And if none, what do you need to see to embrace Lithium Mania 2.0? Namely the search for lithium pegmatites in places like Canada. And I was surprised at the dismissive responses that were generally made by the panel. And it is worthwhile for people to click to that part of the YouTube video where that question begins, just to see how early we still are in this boom cycle that is just beginning, and which I think by September will have exploded in a very, very big way. One of the complaints was that we missed the boat. We're not ambulance chasers, and to some degree I can understand that, because in 2015-18, that was the huge exploration wave when all the hype about EVs and the lithium-ion batteries came. And that's when all these companies moved into the lithium triangle, picked up projects in Chile and Argentina. The ones in Argentina have made the most money for companies. But the Australian juniors, which picked up all these pegmatites that were exposed there, worthless, found decades ago and worthless, they have done extraordinarily well. And of course, they did so well that their supply crashed the lithium price. And we had that terrible period, 2018 to 2020, where lithium carbonate dropped as low as $3 a pound. And then when in 2021, when it became clear that the EVs were being adopted, not just Tesla EVs, but all the car makers were getting into this game. Then we saw the lithium carbonate price go up, and then the survivors from this first wave, they did extremely well. So you have stocks like Sigma Lithium going from $4 to $50, but that was a Brazilian pegmatite version of the Australian pegmatites, so that made sense. But the one that sort of makes people mumble is Patriot Battery Metals, which was like a nothing company in 2021. It had acquired the Corvette project back in 2015 as part of the initial wave, but it never got anything going. In fact, it's ironic. In 2018, I had them as one of my session companies, based not on the lithium potential of Corvette, but on the fact that it was next door to Midland's Mithril project, which had an emerging copper discovery that appeared to be something new and big for the James Bay region. Anyways, during that period, lithium carbonate was down to $3 a pound, and nobody was interested in the lithium. And I figured also, whatever future lithium is going to be required, the Australian pegmatites and the lithium triangle brines, they'll take care of whatever is needed. So I kind of sat out, missed the boat, and when Patriot Battery started taking off in 2021 and in 2022, that's when I looked at it again and understood that there's something different going on. And this is what most of my peers seem to miss. Yeah, we all missed the first boat. Some of them were on that boat and got sunk by the downturn in lithium prices. But what's happening here is the question of, yeah, we know the Australians and the lithium triangle brines will take care of the first half of a needed 600% expansion, but who's going to take care of the second half? And this is what Lithium Mania 2.0 is all about. And Beyond Minerals has a portfolio of 60 plus properties in Ontario, which it acquired from the prospectors who had assembled it. And what's starting this summer is the biggest boots on the ground prospecting boom in the entire history of Canadian exploration, because one of the complaints that my peers made is, there's pegmatites everywhere. Everybody has a pegmatite. Yes, that is true. But we don't know what the grade is, and we don't know how big they are. And so what's underway now is a race to find the biggest and highest grade pegmatites that are just sitting there to be grabbed by the juniors. So this summer, all these prospectors will be out in the field, checking out these reported locations of pegmatites that were, mentioned when past explorers were looking for precious or base metals, see how big it is, get their LIPS or XRF guns out there, get a reading as to whether they're fertile, get samples, get them in the lab, and come September, we should see a huge number of results coming in. Another reason some of the analysts are dismissive is they are largely they're ideologically wedded to the idea that fossil fuel combustion as a cause of climate change is a hoax. So they just ideologically cannot embrace the lithium boom. But that's just their problem. Some of them are mystified by the apparent complexity. Some think it's an industrial mineral, and we know industrial minerals like kaolin and feldspar, the end users have very precise specifications for purity, and if you get sucked into an offtake deal with them, then you're forced to make sure the purity is perfect. The industrial mineral plays are very difficult. They're also not very large. They're not really commodities. They're always customized for a particular customer. But lithium, it's a metal, and just as you have to have certain your concentrates have to not have a lot of selenium or arsenic or something like that in it, lithium concentrates also need purity requirements, and that's part of the game that's coming up. Is avoid the pegmatites that have iron, too much iron in them. Avoid the ones that have thorium and uranium in them, because you're going to have to strip that out before anybody who wants to make a battery out of that is going to use it. So I think this dismissive attitude, miss the boat, don't understand it, don't believe EVs will be adopted, and there's some people have the view that, well, politics change all the time. Right now it's policy driven, but maybe there'll be a government that eliminates all these policies. But then again, they're missing that the car makers are shifting to electric vehicles, whether or not there are policies driving it. That they've made a decision where they've gone beyond the point of no return. There's so much battery manufacturing capacity being built, even refining capacity to deal with spodumene concentrates. This is clearly a boom that's going to happen, and I think it's unfortunate that the audience there really isn't into this story yet. But I think by September, we will have seen some very significant developments. Patriot Battery Metals, it hopes to have a resource estimate out sometime in July. All these companies are entering the field. In the case of Beyond Lithium, they are sending teams out to check out all of those 60-plus properties, find out the location of the pegmatite, take their readings with their LIPS gun, and take samples, and reduce this to about a couple dozen of high-priority ones, which in August, September, they'll go back in there to develop drill targets. And many of the juniors, all of those with their act together, are going to be doing this summer. And once Patriot Battery has its resource estimate out, then it can start an auction, like if somebody big wants to acquire a world-class pegmatite project and take charge of it now rather than leave it in the hands of a junior to push along. The second half of this year would be the time to do it. And most of us missed the Patriot battery boat, but Patriot Battery's Corvette discovery solves only a fraction of the future supply problem. There need to be many, many more. So I think this summer is going to be not the usual doldrums where nothing is happening. I mean, that's what the April and May have been all about. I think this summer is going to be extremely exciting in the Lithium Mania 2.0 space.
How important is the new strategic investor FPX Nickel announced this week?
Well, on May 30th, FPX Nickel Corp surprised us with a $16 million financing announcement done at 60 cents, which is a 41% premium to the 42.5-cent price on Friday. And it's with Outokumpu, which is a Finland-based stainless steel producer that specializes in so-called responsibly produced material, in other words, ESG credentialed, for the whole European market and other markets where it matters that the carbon footprint of making these materials is as low as possible. So this is a very significant endorsement of the car, and there are no warrants to it, attached to it. They did, unlike the secret strategic investor from last year in November, who did not get offtake rights, Outokumpu has secured offtake rights, and so it gets to take 60,000 tons of nickel over 8 years, and that's about 7,500 tons per year, which would be about 17% of the 44,900 tons production that the PEA projected. So it's still only a portion of it. And what's interesting is, unlike some of these deals that Elon Musk's Tesla has done with companies where it's at some fixed nickel price or at a discount to whatever the LME price is, the offtake rights will be simply at the market price with no discounts or anything like that. Now this deal is important because it validates the ferro-nickel concentrate that Outokumpu would be feeding into its stainless steel mills. And that's important because this type of product is brand new. It's made from the awaroite mineral, which has never been commercially exploited before, which is a reason why FPX Nickel has had so much trouble getting traction in the market. The stock, based on the PEA assumptions, with the cost escalated 20%, the stock should be trading around the $2 level right now, awaiting validation of the pre-feasibility study, which is still expected in September. And that September milestone will now be very important because the market is unsure what the actual cost escalation has been, both from the inflation of the past few years and whatever tweaks they had to do to the flow sheet in order to achieve the pre-feasibility level standard required for that level of economic study. And the interesting thing about the secret strategic investor from last year, who had 9.9%, they have a 7-day right when there is a financing like this to get back to 9.9%. So they're now back to 8.9%. So it will be interesting to see if they cough up some extra money at 60 cents over the next few days, early next week, to see if they stay at 9.9%. Now, we now know the identity of Outokumpu. The market didn't really react right away, but has started to warm up to the implications of this. But one has to wonder what the strategic investor who insisted on secrecy is thinking. When they did that financing for $12 million in November, and this one was twice that amount, $24 million, that was at 50 cents. But since then, FPX Nickel has de-risked the ferro-nickel concentrate flow sheet, and it has optimized the nickel sulfate flow sheet. And here comes this stainless steel company and gets to buy the stock at 60 cents, a mere 10 cents higher than the secret investor. So how has the secrecy benefited? And in a previous episode, I talked about how, I don't, this secret investor seems to be interested in the battery potential for the nickel sulfate that can be made from the ferronickel concentrate. But if it's some chemical company nobody ever heard of, who cares if we find out the name? If it's a battery maker, also who cares that this battery maker has invested in FPX Nickel? And if it's a car company, why should we also care? And Martin Turan insists that when we do find out who the investor is, it will make jaws drop. The market will care. And there's only two companies that I think would qualify and who would have a reason for secrecy. And that would be a company that isn't yet in the car making space, but will be in that car making space and will require a higher end nickel type battery with a cathode, not these cheap lithium iron phosphate cars that China's producing and that even Tesla is going to produce as a mass market product. No, these are going to be cars, and I would say high-end cars, and I would say they will be self-driving cars. And there's only two companies who are really working hard on that, and that is Apple and Google. And they may never really complete the self-driving car project, which is why they would want secrecy. So I suspect if we did find out that it's Google or Apple that made this strategic investment, that would really turn heads and attract a lot of attention, because of course it would have implications that those two giants are very serious about eventually entering the car making business by providing all the software that makes these cars run, and they would both be interested in the ESG potential. Now there has been this complaints about the dilution of doing this financing, and yes, FPX Nickel is undervalued, and it's a shame to have to dilute, but it really only pushes the fully diluted up to $284 million, and they now have over $30 million in. It was done at a premium to the market. That this premium was even bigger, 41%, compared to the lower premium that the strategic investor had to pay back in late 2022. And FPX Nickel now has the ability to move to permitting, environmental studies, feasibility study level engineering in 2024. Well into 2025. The September feasibility study will be a major milestone. That's when institutional capital can wrap their heads around it and get involved. The stock can price higher. Right now, the stock is too cheap to attract a buyout bid from a producer such as Vale, which might be interested in a long-lived asset like Dakar, because such a company can only pay so and so much a premium above market, and of course the company has enough strong shareholders now that somebody making a hostile bid at a cheap price is not going to have any success. But after September, we will see the stock grind higher. The company can stare down the producers that eventually are going to buy this company out, and they do not have to go to Bay Street. We still could get some terrible recession happen, some catastrophe in the market that tanks all the stock prices. FPX Nickel has the money in the bank to continue working on Dakar, and it will not have to go to Bay Street. Bay Street has been horrific to retail investors who buy these more advanced feasibility demonstration companies. One day your stock's at $1.50. Oh, next day there's a $1.10 bought deal, deeply discounted bought deal. So your retail investor is suddenly down 25%. Does the stock bounce back after the bought deal is done by Bay Street? No, it doesn't. So the FPX Nickel is now spared this death spiral type financing which Bay Street has been inflicting on resource companies during the past couple of years. as we slip back into a general bear market, and which we're still sort of stuck in. But for a story like FPX Nickel, unique, where you can understand it, this is an incredible opportunity for resource sector speculators to get a piece off now that everything is in place except the uncertainty about how much costs have escalated, which we'll find out in about 3 months.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.